We are very happy to welcome you to end of year 2022 financial outlook. We're going to take this opportunity, and it's a special opportunity, to give a special tribute to our star agent, George Casares, a good friend. He's been extremely loyal and very helpful to Lanterra over the years, but he absolutely distinguished himself in Glen Hill by being far and away the largest seller producer in Glen Hill. Glen Hill is a very special project to all of us, and George seems to see it. So we're going to take the opportunity to pay tribute to George and at the same time share with you some of our thoughts about what to expect for 2023.
I have a lot of respect for you, George.
Thank you. Likewise.
You see it before anyone else sees it.
Thank you.
When you hit Glen Hill, I knew you were going to hit it, and I think you hit it because of us as Lanterra being great people, but I think you also got it because of the pricing, and you understand the I'm not going to let you speak yet, George, of the perceived value. So, George, I just want to say on behalf of Mark and I, thank you so much. I would love to chat with you today about the market. I always look forward to your insight.
I appreciate that, Barry, and the relationship that I have with Lanterra since 2005. I'm truly blessed. Glen Hill, guys, tremendous upside potential, and that's why I did extremely well. Not only a boutique building, 60 different floor plans. You just don't get that. Next to the Hebrew Day School, next to the synagogue. I invested in multiple units myself, so took advantage of the time during COVID. And again, we have that similar situation today where interest rates are going up, and GMTers, my group is just loading up. So, very grateful. Thank you.
We're heading into December 2022. This very afternoon, Powell at the Fed gave some hint about where the market's going to be going. Everybody has his own crystal ball. We've been spending a lot of time in the last few days speaking to our experts, and we're here today to share with you some of the things that we have heard and what we think is going to be happening.
I actually don't look at things day by day. What I like to look at is I look at the shape of the market. I look at the long-term longevity of the market, and we've been right on. And, whether interest rates are 6% or 4% or 3%, I know that deep down, owning real estate is the thing to do. Second of all, strategic locations. And third of all, you and I chat about it all the time. We're very, very bullish on the market and the overlook of the market for the long term. So, we can sit there and watch CNBC or BNN or whatever, and they'll tell you by the minute where the market is by the minute. That's not the right way to look at the market.
You spend a lot of your time talking with our banks, and they include all of the, Class A chartered banks in Canada. How do they see the market in terms of their liquidity and their credit available for the construction industry?
Well, in fact, I'm having dinner with one of the main banks tonight at 6:30 to increase our access to facilities. So they're still full born on the market. They're very, very bullish, Mark, and they look like we do for the long term. And they know what real estate does as an asset and as an asset base, and they're not concerned.
For those of you who are on George's database, we get comments or opinions literally like almost every day. And George does not hold back. He says it like he thinks it is all the time, and probably has the best batting average of any commentator in the real estate industry. So what are you telling your folks these days?
I believe today's environment, Mark, is a tremendous buying opportunity. Builders on their knees, so to speak, right now in terms of the uncertainty, and we're just loading up. I think the U.S. Fed and the Bank of Canada overshot in terms of interest rates, and they can overshoot all they want. They're just going to bang hard down even faster. So we're looking at that in early 23. My only worry is a little bit with the labor market because disposable income has been eroded, middle-class families, and I think that people have every right to seek more money. And as a result, there's some labor unrest now, and that's caused by inflation, right? So they need more outgoing, need for more incoming. And with inflation coming down, I think we may even go to deflation. And I think that it'll be a better position in spring of 23.
So, Anne, there's nobody in the trenches more than you are. Day in and day out, you're acting with purchasers all the time. You're negotiating with them. No doubt sales are slower than they were, say, a year ago or 6 months ago. But tell me, what are you experiencing on a daily basis these days?
In the resale market, it's been pretty steady for the last few months. There's been 5,000 transactions every month. The average price has maintained at about a 1.1 million or just below 1.1 million. And a year ago today, it was just over 1.1 million, so that's good news. Also, I think in the pre-construction, like if someone bought a long time ago and now they're having to close on a higher rate, it doesn't really matter because they bought at probably 40 or 50% less purchase price than they would be buying today. So it kind of helps balance that out. If they're buying today for a project that's going to close in 4 years from now, again, there's that security that you're not closing immediately. The rates will probably be back down to where they are now, even though the prices are up. So it's all balancing out quite well. I feel in 2023, rates will probably just stay where they are for the full year. I don't see them dropping yet, only because I think they want to make sure that inflation is dead. And also, I think in probably, you're right, probably end of 2023 in pre-construction, I think there's going to be so much demand, even in resale, that sales are just going to pick up like crazy.
There's activity in the pre-construction marketplace. There's a lot of buyers on the sidelines, but if you present value, location, people are not going to sit on cash for long. Investors want to put their money to work. Those with a vision with pre-construction 4 to 6 years out, who cares about the current here and now? We're capitalizing, buying now and loading up during these times because material costs, you know, when everything turns back again in terms of sales, material costs are going to go through the roof. Labor already, because of the rate hikes, you know, more money, the labor force needs more money. So we have wage inflation on that front. You know, this is a tremendous buy opportunity. Okay, so talk about pricing. I don't care what the media prints or whatever. They're talking about GTA numbers. GTA, you know, what's Lake Scugog got to do with Toronto 416 condos? Absolutely nothing on one, or Milton for that matter, or some of these outlying areas. They're two totally different marketplaces. And whenever you see it in the headlines about GTA, well, guess what? The reversal is coming back now. The exodus going out to these outlying areas in the 905, 705 over the past 2 years has created fictitious surges in these areas. Some of these areas, Barrie, Muskoka, they're coming back to reality. You know, there was an article, thanks to GMT, that 25,000 on average immigrants will be coming in every month to Ontario, okay? Of those 25,000, 50% or more will be coming into the GTA, okay? So again, I mean, when I look at factors like that, when I look at this short-term overshooting of interest rates to curb inflation, you can overshoot all you want. Reality is it's a supply chain issue.
You know how you look at life, right? You don't look at life by the day. You look at life in the big global picture of things, right? So where were we 20 years ago when you bought real estate?
Absolutely.
Where?
Yeah.
What did you pay a square foot?
Oh,
Back in 2000.
600?
No, 4 and a quarter.
4 and a quarter. We sold Maple Leaf Square.
We started Water Park City at 250.
No, no,
We
but
sold
he
Maple
started
Leaf
at Maple Leaf Square,
We sold
4 and a
Maple Leaf
quarter.
Square at $440 a foot,
Yeah.
right? Maple Leaf Square down today, that's trading at $1,400. Bottom line is, you need to own real estate in a portfolio. Like, for example, in Glen Hill, when you bought units at $1,400 a foot, those days are gone, George. So, like 5 years from now, 7 years from now, Mark, the stuff's going to be substantially higher. I'm not going to tell you it's 2,000 because I'm probably wrong. It's going to be higher.
The thing that scares investors or buyers more than anything else is if prices retreat. Prices have not retreated in a very long time. And I don't see any element in the system that's going to make them retreat. Not because the government thinks they're going to increase the supply because it ain't going to work, or prices aren't going to go down. If interest rates go down, they'll just go back down to where they were before.
I'd like to elaborate. The Ford government, I believe, just came out and said, you know, we're going to chop up the Golden Horseshoe or whatever it is, right? The Green Belt. Well, where is the Green Belt? It's not in the Toronto 416. And then they said something like, well, the latest we're going to start that is 2025. Yes. Well, let me talk to that a minute. 25,000 incoming every month. That's 300,000 a year. 2.5 to 3 years away, you have 750 to 900,000 immigrants
and they won't
before
live downtown.
they even start.
And they ain't buying a house in in the
before they
boondocks.
even start putting 9,000 homes as the target. What is 9,000 homes going to do to help out the supply issue with 750 to 900,000 projected immigrants incoming? Nothing.
From our own experience, and this surprises me, it seems that the higher priced luxury segment of the market is actually the most robust right now.
Yes. The last few months, our most expensive luxury condominiums, we've had, can I say price, like up to $12 million units sold, has been the busiest time that I've seen in a very long time.
So
They know-
purchasers are not interest sensitive. They actually
They're not interest sensitive, and they're buying a home for themselves. And like George said, now's the time. I mean, don't wait. This is a very, very good time.
So projects like Scholar or Glen Hill, for that matter, there was somebody just in the sales office just a bit while. We only have like 2 or 3 larger units
Left.
If you want a large unit, and Scholar also.
Yeah, they've sold first.
That's what's driving the market today. And it's counterintuitive. Nobody would expect it, but that's what our experiences are in the last several months.
Absolutely.
So lackluster sales, okay? So now we're talking lackluster sales. I love lackluster sales, okay? And the media tends to always, well, sales are down. Who cares? You're creating another month of buildup of sideliners, okay? If this sales activity keeps on going lackluster, that's great news for us investors, okay? If you want to watch the key indicator to prices coming down significantly, it's not sales volume. That's just building a mountain heap of buyers that inevitably will jump back into the market, maybe on a panic buy and blow that 1.25 million number in the Toronto 416 out of the water very, very quickly, okay? Because now you have 8 months of lackluster sales. But if the key driver is supply, okay? And I'm not seeing the surge in supply, Mark. I'm not seeing the surge in resale listings. As a matter of fact, resale listings, I believe the last report was a 12-year low. You have 8 months of sideliners on the sidelines. You have record low supply. You have rents that are at all-time highs. Who's creating the high rents? Market timers, right? I'm going to rent. I'm going to try and time the market. Timing the market to pick up what Barry said, not a winning strategy over the last 20 or 50 years or whatever. There was an article, Finch and Leslie, detached, $14,000, 1963. So timing the marketplace, guys, is not the way to go, in my opinion.
Okay, we got to wrap up. And I think I'd like to ask you each to give us your crystal ball, best case scenario, interest rates, middle and end of 2023.
I don't look at it by the per square foot by the day, okay? We need to own real estate. Everyone should have something in the portfolio. We did a great job, you and I, 20 years ago by building a core business downtown Toronto. 5 years from now, whether we're at 2,000 a foot or 2,200 a foot, we're going to be substantially higher. I don't know the actual number. Where interest rates are going to be, I don't really care. They're going to be lower, in my opinion, but I don't really care. I think there is going to be an issue of supply and demand. You can have a lot of people moving in, however that creates moving the needle. And I think we're going to be so much more healthy and stronger with respect to pricing. George, you got 10 seconds. Thank you.
No, seriously, George, interest rates.
Okay, so talk to
End
interest
of
rates. I
the
think
year.
interest rates are going to bang hard down. Okay, and
Hard?
Hard down because
Starting when?
Okay, well, wait
Starting
a
when?
minute. An indication of that is the 5-year fixed rate is lower than the 5-year variable. If the banks thought that there would be a continuation up in interest rates, that 5-year variable at 5.25, that 5-year fixed should be at 7 or 8% to pad the upside, right? Why is the 5-year fixed, Mark, lower than the 5-year variable? Because banks are betting that this is going to be a short-term thing.
Okay, that was a good answer. I like that
So,
answer.
Anne, what do you think?
I don't think it's going to be a hard down. I think it might be after about a year. I think you'll start to see it go down gradually. They're trying to keep us at a certain particular level and not fly up to 40%. I think that they want to make sure inflation is dead. I think then they'll start to bring it down. They don't want to make the same mistake they did in the 80s where they just dropped interest rates immediately and then they went back into another recession twice over. So I think they're going to be a little careful.
Well, there you have it. On behalf of Barry and myself, we'd like to thank you for listening. We'd like to wish you a great holiday season, a happy, healthy, prosperous coming year, new year coming up. And hopefully you'll all have lots of joy over the season with your families. And we're all going to be looking forward to a better year.
Thank you to GMTers. Since 2005, we've been doing business with Lanterra Developments, and we're doing very, very well because of them as well. So first and foremost, thank you, GMTers. I wouldn't be sitting here today if it wasn't for you. And I'd also like to thank Anne and her team, Mark and Barry as well, for giving us product with tremendous upside potential. Looking forward to doing business with you many more years to come, guys, okay?
Okay, thank you.
George. Thank you.
Next one.